So back in 2025, the US economy was promised this incredible renaissance, a historic comeback, right? But is that what really happened? Well, today we're going to dig into the numbers and separate those bold promises from the hard data that actually followed.
And this really gets to the heart of it, doesn't it? It's the central question our sources are asking. It really frames this whole story about a massive gap, a gap between perception and reality, between the big political promises and what was actually happening in the real-world economy.
Okay, so the year kicks off with this incredibly powerful vision. And we're not just talking about a little bit of improvement. No, the promise was for nothing less than a historic economic renaissance, an American comeback story for the ages.
And look, these weren't just some vague hopes. These were concrete pledges. The plan was to absolutely ignite GDP growth, spark a huge surge in new jobs, get those factories roaring back to life, and reassert America's economic dominance on the world stage. And you know what? For a little while there, the markets, they bought into it. Hook, line, and sinker.
Yeah, but that optimism, it did not last long. By the middle of the year, the official data started to roll in, and, it told a completely different story. Those really ambitious goals were just hitting a wall of hard, cold economic reality.
And this is exactly where you can see that gap just open right up. The promise, right, was for sustained growth of 3%, maybe even higher. But the reality? The economy was struggling just to stay around 2%. And that's not a small miss, folks. That is a completely different economic story.
So, you gotta ask, what was causing this slowdown? Well, economists at places like the CBO and the Fed, they pointed to a few key culprits. First, productivity just wasn't improving. Then you had businesses getting kind of nervous about investing, high interest rates were choking off borrowing, and, maybe most critically, regular families were pulling back on their spending because prices just stayed stubbornly high. So, of course, that slowdown had a direct impact on the labor market. For years, job growth had been this huge source of strength for the economy. But in 2025, it showed some really clear signs of just running out of gas.
And to really feel how big this shift was, you have to see where we were coming from. The previous year had this incredible momentum. The economy was adding over 400,000 new jobs a month, on average. That is a truly blistering pace.
And then, this. Bam. By May of 2025, job creation just plummeted to 139,000. Look, this wasn't some gradual slowdown. This was like hitting a brick wall at full speed. Companies slammed on the brakes with hiring, and all that momentum, it just vanished. Poof.
And, the problem was even deeper than just the unemployment rate ticking up to 4.6%. The really worrying signal was the drop in labor force participation. Now, what that means is millions of people hadn't just lost a job, they had stopped looking for one entirely. And that is a classic sign of a deeply discouraged workforce.
All right, so now let's talk about the issue that really hit closest to home for most people. Inflation. It just stayed stubbornly high, putting this constant, relentless squeeze on the finances of American families. This right here, this shows you the crucial math. So yeah, wages were going up by about 3.1%. Sounds good, right? But the problem was, inflation was running even hotter at 4.2%. The result is simple, but it's devastating. Your real purchasing power was negative. You were earning more dollars, sure, but those dollars bought you less stuff.
And this wasn't some abstract economic concept you read about in a textbook. No, this was real life. It meant the cost of all the essentials, we're talking housing, food, gas, it just kept climbing. So for the average household, daily life didn't feel like some grand renaissance. It felt tighter. It felt more insecure.
And it wasn't just households feeling the pinch either. You started seeing major corporations sending out these big warning signals. Think about it. When a company like Ford announces job cuts, even though they're getting tax incentives designed to create jobs, that sends a really powerful message. It's basically saying that the incentives just weren't enough to overcome a much deeper economic uncertainty. Okay, so this brings us to another major policy pillar of 2025, the return of a really aggressive America First trade strategy. Now, the goal was to protect American industry, but as we're about to see, the consequences, they were complex and they were very far-reaching. Okay, let's just walk through this chain reaction, step by step. First, the US imposes these heavy tariffs. Then what happens? The cost of imported goods, things like electronics and cars, it shoots way up for you, the American consumer. That just feeds inflation. Next, our trading partners, they hit back with tariffs of their own. And finally, American exporters, especially our farmers, they get hit really, really hard, with exports of key products like corn and soybeans just plummeting. You know, these trade tensions also really spooked global investors. You can see it right here. Foreign direct investment into the U.S. fell by a staggering 29%. That was the sharpest drop among all advanced economies. We're talking about billions of dollars in potential growth and new projects that just went somewhere else because the uncertainty here was simply too high. So when you put it all together, you combine the slowing growth, the faltering labor market, the persistent inflation, and these chaotic trade tensions, you arrive at the source's final diagnosis for the U.S. economy in late 2025. And the term they use for this is economic fatigue. Now, this is a really crucial point. It's not an outright crash. It's not a full-blown recession. It's more like a state of chronic underperformance, where the economic engine is still running, but it's lost all its power and momentum. And that creates this widespread anxiety instead of confidence.
The analysis really wraps up with this powerful analogy. It says the American economy resembles a car racing downhill with no brakes and no clear steering. And think about that. At first, that speed, it feels exciting. It feels like progress. But really, that motion is just masking a dangerous lack of control. It's a system with no brakes and no clear direction.
Which leaves us with this final, really critical question. When speed looks like progress, how do you know you're actually heading for a crash? It's a huge challenge, right? To look past the big promises and actually focus on the foundations. To ask what it really takes to build an economy that's not just fast, but stable and strong for the long haul.